Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So this is going to be my last update for about a week. I talked about this over on Twitter, some of you probably saw this, but I do have a kendo tournament that I am going to be fighting in over on the 19th. So I'm going to be gone for approximately a week from today. I might be back next Wednesday, next Thursday, something like this. Just wanted to give you a quick heads up so you know where I am. I haven't disappeared or anything, but as I'm going to be gone for a week, I want to prep you, I want to talk about what I currently see in the markets in terms of the news. Something I mentioned 4 months ago, the Bitcoin liquidity crunch that I said was incoming into these markets is finally here. Let's talk about this, let's dive into the Bitcoin charts, talk about some analysis patterns that I see, price targets. I'll give you a quick update on your Solanas, your Cardanas, your stock market charts, what's going on in the dollar, what's going on with financial conditions. Let's dive right in. So like we said, on the channel about 4 months ago, I was warning you of an incoming liquidity crunch for Bitcoin. Now, when I made this video, Michael Saylor was getting a margin call, Voyager was going bankrupt, Celsius was going bankrupt, and it seems like we're seeing this same scenario again in another liquidity crunch. I'm sure everyone's seen in the past week, FTX has gone bankrupt. It has now been said, Binance CEO got a call from Sam the other day, and Sam admitted the entirety of FTX is now insolvent. Now, I talked about this. If you watch my past couple of videos, we talked about how coming into this week, we might see a lot of exchanges pausing withdrawals and starting to go bankrupt as they probably had liquidity in FTX. Now, since this has happened, we've seen BlockFi, they are pausing withdrawals. Today, we've got Genesis Trading, and they are saying that this default has negatively impacted their liquidity, and because of this, they're looking to de-risk their book and try and increase their liquidity profiles. Now, this is not looking good. There's panic left, right, center. Is Genesis Trading going bankrupt? Is Crypto.com going bankrupt? Is KuCoin going bankrupt? People are rushing to withdraw their cryptocurrencies out of exchanges, and this is a liquidity crunch. A liquidity crunch is basically where, say if you've got an exchange, you've deposited 9 Bitcoin in this exchange. With FTX, they would have lent out 8 of that Bitcoin. So let's say you wanted to come withdraw your 5 Bitcoin, they've only got like 1 of your Bitcoins in that exchange. So that is a liquidity crunch. They are suffering. They do not have the liquidity to meet the demand of all of these withdrawals right now. This is why crypto firms, exchanges, left, right, center as well. You know, we've got Liquid Global and Salt Lending. They've also paused operations. So, you know, this is no joke. We talked about this a few days ago and said maybe this week a few exchanges would go bankrupt. There's tons. Winklevoss's Gemini is also delaying withdrawals, citing issues of a liquidity crunch. So this is absolutely no joke. All of my unpopular opinions for the past 6 months, 4 months in terms of this liquidity crunch, they're all finally starting to come into fruition. So make sure you get a hardware wallet. Do not keep your cryptocurrencies on exchanges. I recommend a ledger. I don't even have a referral code, but nonetheless, I do highly recommend all of you go out and get a ledger. Keep your crypto safe. It only costs £60. You know, if I'm wrong and these cryptocurrency exchanges don't go bankrupt, you've only spent $60 to secure your cryptocurrency. If I'm right, then, you know, your entire net worth could be lost if you've got money in these exchanges. So let's move on. Let's talk about what's happening in the Bitcoin market. So in the past week, we talked about the TA, very plain and simple. What happened? We didn't have enough liquidity. We didn't have enough momentum to break down to lower levels. What did we do? We tricked the bulls that we were breaking bullish. We grabbed liquidity from higher levels and we started to break down to the downside. That was all history. We all know this. But now what is forming on the 4-hour time frame? You can see since this descent into new lows down to 15,600 so far, it looks like we're starting to form a bearish pennant. Now, you can also argue this is one big and nasty M pattern. On the 4-hourly time frame for the squeeze momentum indicator, you can also see we're starting to trickle into this dark green territory, which is indicative that we should be getting ready for the next run to the downside. The last time this trickled into dark green, you can see we were right here. We subsequently dropped about 6.5%. The time before then, we were all the way up here, and I'm definitely not saying that we're going to have the same reaction as we did over here because, you know, we had bearish news pulling us down to lower price targets here. This was a 26% drop. So nonetheless, whatever you're looking at, I do think momentum is going to be starting to shift to the downside. Let's also look at something like a stochastic, and as you can see, Momentum is still rapidly picking up to the downside. On average, we've only just come down to the heartline. So it looks like we've got a little bit more room to move down in the lower time frames for Bitcoin. I'm definitely, not trading this one. Like I said, unfortunately, for the next week, I'm going to be away from these charts. So I'm not going to be opening any new trades. I'm not going to be saying, hey, if we go up to this level long, if we go down to this level short, etc., etc. I'm really on the sidelines letting you know what I think. When I come back in the next week, we'll reanalyze the markets, look for a new trade or something like that. But no rush to run into anything right now. If we check out some of the oscillators over on Bitcoin, let's come over to the higher time frames, because in my most recent videos, we talked about, how long we were holding these lows for cryptocurrencies like, your Bitcoins, your Solanas, your KDAs. They were all holding lows for an absurd amount of time. This was a very boring crab market, almost 150 days in the crab market. And now this is why when you come over to the higher time frames, people are kind of freaking out, seeing this massive, massive bearish engulfing candle crushing away, all of their gains. But then you come over to the higher time frames and you're like, wow, this downtrend hasn't even really started. You look at something like not a squeeze momentum indicator. You come over to the MACD and you can see on the weekly time frame, we haven't even yet crossed bearish. Histogram bars for the past 2 weeks have been coming down, but we've got a long way to go before we even flip bearish on the MACD. Now, over on the squeeze momentum indicator, slightly different story. You can see we have started to trickle into light red. We'll look at, what happens when we come into light red in a second. And then also stock RSI. This is really beautiful. You can see, when you had this double top on the stock RSI, you were at the all-time high at 69,000. The next time you topped out on the stock RSI was around about this 87 level, and Bitcoin was trading at 48,000. And recently we pushed up, we made a higher high from this, basically a double top from the 69K region, almost as extended as we were at 69K. And this was when we were right here at 20,800. So you can see, huge meltdowns when the stock RSI flips bearish on the weekly. You can see, some of these downtrends last for months and months on end. And we, the stock RSI flip bearish, we've only been coming down for, 1 week and 2 days. So, it's been less than 10 days since some of these indicators have started pinging back down for macro trends. Also, if you come over to the squeeze momentum indicator, you can see, let's look at the trend. When this ticked into light red, we were all the way at 30,275. We proceeded to put in a 41% drop. Over here, you can see we started trickling into light red. Where were we trading? We were trading right here at 47,500. We proceeded to put in a 30% drop, bounced a little bit, and then came down for that 47% drop. So in terms of the squeeze momentum indicator, we did start to reset from here. So this move I would call a 30% move to the downside. And you can see, etc., etc., etc. Over here, we were trading. It actually fired on this weekly candle over here. So squeeze momentum indicator on the weekly time frame is, like I said, it's a slow moving trend. So sometimes it flips bearish after you've captured a lot of the move. Let me just make sure. Yeah, I have picked this from the right one, but you can see the trend started subsiding from some of these higher levels. But right now we're really focused on just moving from red territory, dark red territory, light red territory, dark red territory, light red territory. This zone where we're constantly in bearish territory in the macro time frame is obviously indicative we're still in a nasty bear market. Just like when we were over here after the pandemic capitulation, we spent most of the time in green territory instead of ebbing and flowing between red and green. So it's very clear momentum is really starting to pick up for that next wave back down, in my opinion. Now, in terms of where could we be coming down? I've talked about this in my most recent videos. I think we're coming down to 14,000 in the immediate short term. If we do come over and look at this 1.236 Fibonacci, or sorry, 1.618 Fibonacci extension, you have round about 13,000. Now there's a lot of targets round about here. We also have a AB equals CD pattern down here at 12,000. So right off the back, we've got that 14,000 big psychological level. You've got that 13,000 level that we just talked about, round about 12,000 for that AB equals CD pattern. And then coming back over to the Bitcoin CME futures, you can see that we do have CME gaps down here at $11,000. So once again, right now, I'm really not predicting that we're coming down to 11,000. I've been saying this for a while. I'm happy to buy as we come down to 14, as we come down to 13, as we come down to 12, as we come down to 11. It honestly really doesn't matter to me if we go down to 9, 8, 7, 6. If we come down and bottom at 14, 10, 11, 12, I'm going to have bought a good amount and I'm going to be happy for that rally. And on the flip side, if we continue moving moving to the downside. It's been well documented on this channel. I've been sitting on the sidelines for the past 6 months, and I warned what happens when you DCA every single dip in a bear market, and I'm starting to see people saying they're running out of liquidity as we're coming down to these final dips. This is once again what I warned about. This is why I'm now happy to start aping in at these cheap levels, because I do still have a big bag of liquidity on the side because I've been very patient. Well, let's move on from what's happening in Bitcoin. Just a quick update on Solana, because some people have been asking me, what's my view on Solana? When's the next price target, etc. I did give you a warning about 7 days ago. It was only a 7-minute video, so some of you might have missed this. I did include a little bit of TA at the end of the video, and if I'm being completely honest, my opinion on Solana hasn't changed for the last 6 months. If you've been watching me, I've been telling you we're coming down to $10. So if I'm honest, I really don't have anything major to update you on. Like I said, $10 until we come down to this $10 price target I've been talking about for ages. There's not much need for a macro update. I'm still looking for new price targets. Like I said in the last video, literally a week ago, we told you when we were up here about $18.60 that I think we're coming down to this $8 price target. Obviously, I previously said I think Solana bottoms around about $10. Obviously, 6 months ago, I can't foresee that FTX was going to go bankrupt and this FUD was going to bleed into Solana, even though I'm a huge Solana bull, and I strongly agree and believe that Solana's got nothing to do with this whole FTX drama, apart from FTX maybe having good funds, a good amount of funds in Solana, and they've also invested in a lot of the Solana ecosystem. So that is what people are worried about right now. I think Solana is going to do just fine. I'm going to be buying at these cheap levels when everyone says, it's going to zero. And bear in mind, 6 months ago when Solana was at like $100 rather, I was saying Solana is going to come down to $10. People called me crazy. They said you're going to miss the bottom. Now Solana is coming down to $10. All the people that laughed at me are now saying it's going to zero. So this is just how the retail mindset works. They're always bullish at the top and they're always bearish at the bottom. Like I always say on this channel, do the opposite of retail sentiment. Go over on crypto Twitter, crypto YouTube, look at the retail traders, look at what they're doing. Do the opposite and follow the smart money, and you will do just fine in these markets. There isn't a range that I'm currently 100% like going to be okay with buying Solana. Although down here there's a massive volume profile around about 450, so I could definitely see myself buying at $5, 450. Currently not saying that we're going to go down here. My current price prediction is at $7.50, $8. The problem is, if we start breaking beneath this, $7.80, $7.50 floor, there is no support until we come down to $4.50. So once again, I'm just being a realist. It might not be what you want to hear, but if Solana does come down to this $4.50 range, I know that I'm going to be happy to sweep my favorite NFT project floors for absolutely cheap US dollar valuations. Let's move on from this now. Actually, wait, one other thing in terms of Solana. We did give you an update 7 days ago. How much has the price come down since then? Because we really rocketed down on the day of that update. We went down 35% since this update, and at the time of recording, we're down 26% since I gave you this warning that a bunch of people were unstaking their Solana. So definitely a worrying signal for Solana bulls. And also in terms of this epoch coming up for Solana, in less than 23 hours as of the time that I upload this, in about 23 hours, the deactivating stake is going to be almost 30 million Solana. That is absolutely insane. If we come over to the circulating supply, you can see circulating supply is about 362 million. So this is approximately, 8% approximately of the supply. I'm not going to whip out a calculator, but you can see a lot of the supply is once again going to be unstaked. And the last time I gave you a warning, this was what I was warning you about, all of these unstaking wallets. It's happening again on a slightly smaller scale, but bear in mind, these markets are really in panic mode right now. So let's move on from here. Let's talk about the stock market segment. Now, before we get over to the dollar and the S&P 500, let's first of all talk about the VIX, because the 2008 fractals that we've been following are just beautifully lining up once again. You can see we've been calling for this bounce. Well, I say I've been calling for this bounce. I've extrapolated this bar chart of what's happened on the volatility index for the S&P 500 in 2008. We've slapped this over the chart of what is happening right now. And, once again, the ebbs and flows, the peaks, the troughs, the peaks, the troughs in the market are lining up so beautifully. And what is the next called move for the VIX? Well, the next called move is for us to have a massive run to the upside. If you're new to the channel, warm welcome. If you don't know what the VIX is, it is the volatility index for the S&P 500, and it basically trades inverse S&P 500. So you can see VIX goes on a massive run to the upside. The S&P 500, the equity markets, your cryptocurrency markets, they're gonna go to the downside. So what this has been predicting for the past month is that the VIX is gonna go to the downside, and subsequently the S&P 500 is gonna go to the upside. Now, the S&P 500 down here is running into resistance. What is the VIX doing? The VIX is running into support. What has the VIX done in the past couple of days? Let's go over to the daily time frame. Well, there was a certain news event that dropped. I don't want to talk about too many of the news events that involve war. I'm sure if you go over to investing.com, you can kind of see what I'm talking about that's happened in the past 24 hours or so. More war news has escalated, and you know, in literally one day, I think it was 1 hour actually, the VIX pumped like 10%. Now, the US came out and kind of said these rumors can't be clarified yet or something like that, and subsequently the VIX started pricing back down. But nonetheless, if we are looking at the VIX on the daily time frame, you can really see we have started pushing up, and even to where we're trading now, in the past couple of days, we are moving up about 8% from these lows. One other thing I did want to show you for the VIX is that, you know, the squeeze momentum indicator is really good at identifying when you're going to be coming back down into this trend line, and subsequently when you should be getting ready for that next move to the upside. I believe it was on the daily time frame. Now you can see the last couple of times we came down and established lows over on the VIX. So for example, we established lows here. You can see we moved from this light red phase in the squeeze momentum indicator to dark green, indicative that bears were losing control. Then we ticked into light green, indicative that bulls are taking over control. And you can see we had a nice strong bounce from this support level over on the VIX. If we look at kind of where we are now, you can see for the past few days, the squeeze momentum indicator is telling us that bearish momentum for the VIX is starting to subside. And this is obviously because a few bearish news stories has started to come into the S&P 500, and obviously the S&P 500 is pretty overextended as it is right now. We'll talk more about that in a second. So just wanted to give you a quick update in terms of the VIX. This has been something to help us understand, you know, the movements, the ebbs and flows of volatility in this market, and subsequently what's going to be the next move for the equity markets. And then, as we know, Bitcoin follows the equity markets unless there's tons of bearish news coming out for the cryptocurrency markets, and then it does its own thing, which is what it's doing now. But with bearish news in the cryptocurrency markets, and then the volatility index for the S&P 500 starting to price in more bearish news for the next 30 days of options expirations, yeah, it's one cycle, like we talked about with the liquidity crunch. You know, it's FTX going bankrupt, then it's BlockFi, then it's Genesis Trading, then it's Gemini, then it's Liquidity Global, then it's Salt Lending, and it bleeds out and bleeds out and bleeds out, and it spirals and spirals and spirals. And this is kind of what we're seeing over here. So let's move on from here. In terms of the S&P 2008 fractal that we've got running, this is the peak-to-peak one, the one that has lined up most beautifully. Like we talked about last week, it was saying that we should have topped out. Now, like we've said many times before, sometimes the peaks and lows are offsetted by about a week or so. Over here, you can see, you know, the bottom was called, but the top was about 3 weeks offsetted. But nonetheless, when you zoom out, you can see the macro trend, the ebbs and flows in this market still beautifully line out. And what we have been identifying over on the S&P 500, which is a different story for Bitcoin, we talked about this about a month ago. We said, you know, we've more or less topped out, and, you know, we're probably going to chop sideways for the next month before breaking down into new lows. And that is exactly what we've done. We have come up and made a higher high very slightly, but we're very overextended. Once again, let's reset our chart, and you can see we are running into resistance. Every single one of these highs seems to be getting a little bit weaker at this moment in time. Squeeze momentum indicator is pushing up in favor of the bears on the higher time frames. In the lower time frames, it looks like we're starting to lose a little bit of the momentum. So obviously bear in mind, daily squeeze bomb starts ticking down bearish. Then in the next few days, weekly squeeze bombs might start pricing in that we are going to take that next move back down to the downside. So just a quick update on the SPX fractal. In the next few weeks, I don't think there's any rush for this to happen, because we are seeing an onslaught of bullish news, bearish news for the stock market. It's all bearish for the cryptocurrency markets, but right now, I don't particularly expect the stock market to have a major move. I do expect us to do a little bit of chopping slowly to the downside, but more or less a crab market until in the next 3 weeks, 4 weeks, we start rocketing down into new lows. This could tie up with our next FOMC meeting, which is 28 days away. A lot of people are expecting the Fed to pivot, even though the Fed has been religiously saying for the past few months, and even in the past couple of days, they've reinstated their position that they want, you know, these markets, they're going to continue to increasing the interest rates. And yes, you know, there's been a few inflation reports which do kind of say inflation is starting to top out, even in the sticky metrics like the sticky price CPI. If we come over to sticky CPI 12-month annualized and also core sticky CPI, you can see for the past 2 months, they did make a high in September, 6.5% for sticky CPI headline and 6.4% for core sticky CPI. This month when they came in exactly the same. So whether you're looking at headline inflation, core inflation, or even like myself, you like looking at some of these metrics like sticky price CPI, you can understand why the markets are getting a little bit excited as inflation kind of starts to look like it's residing. But here's the problem with the markets getting over exuberant when we're talking about inflation expectations. Now inflation expectations are starting to drop. We're starting to see news that core retail sales are pushing up. This means the consumer is more confident in the way the markets are moving, even though, you know, we've got, you know, Eurozone inflation at all-time highs. UK CPI inflation came out at 11.1%. And really, I mean, think about it. Is inflation really coming down that much? Yes, it might be coming down a bit year over year, but when you go to the, when you go to the supermarket, you can really see, you know, inflation is not really coming down at this moment in time. But nonetheless, let's talk about the financial conditions, because like we said, you know, with the stock market pushing up to these highs, with consumer sales starting to push back up again, this goes against the Fed's narrative. Now, the Fed needs tight financial conditions to revert all of their expansionary monetary policy that's been going on for the past 2 years. Now, we cannot be going down and loosening monetary policy and have the Fed's goal of curtailing inflation remaining the same. So over here, if we do move over to the NFCI over the INDX index, what you can see is that this zero ratio right in the middle, this is where you are basically at the heart line. If you're beneath this heart line, you're in the negative, you are in accommodative monetary policy. If you're above this heart line, you're in restrictive monetary policy. Now, I talked about this because it's a lot easier to understand if we were the other way around. So let's pretend that we're not in accommodative monetary policy, we're in restrictive monetary policy. How would the Fed encourage consumers to start buying, encourage investors to start buying equity in companies in the stock market? Well, it would move towards accommodative monetary policy. How would it do this? Well, it would lower the interest rates, the DXY would go down, which means people can buy more goods and services, they can buy more stocks with the same US dollar valuation. That encourages companies in the equity market to float more shares of capital so they can raise funds. That then encourages investors and degenerates like ourselves, especially in the cryptocurrency markets, to go out and buy those ICOs, to go, you know, buy IPOs in the stock market, whether it's just buying equity in, you know, anything, Apple, Tesla, you know, it could be buying equity in something like Cardano, you know, Solana. People are coming out that, you know, these companies are floating equity and people are coming out and they're buying, and that spirals. You're spending money here, that company's got more money to spend, they're going to spend that more money elsewhere, businesses get more money, consumers get more confident, and with that, stock market prices start to go up, investing starts to go up, government bonds start to go down, interest rates continue to move down, and you can see how we've moved from restrictive monetary policy to accommodative monetary policy. Now, flip that on its head. We're currently in accommodative monetary policy, and we need to move to restrictive for the Fed to, you know, destroy that inflation that's been happening for the past 2 years. So for us to move to accommodative to restrictive, the exact opposite needs to be for moving from restrictive to accommodative. So the stock market cannot be going up. This encourages investments, this pushes up retail sentiment, this encourages spending, this encourages borrowing, this encourages lending, this moves us further towards more accommodative monetary policy. So when we're in accommodative monetary policy right now, we need the DX, we need this to happen. Over time, this is what will happen. We need the interest rates to continue to move up. We need the DXY to continue to move up. We need the US government bonds continuing to move up because people are looking to invest in the long haul in government debt instead of risky cryptocurrency projects or, you know, risky stock market projects in the NASDAQ. So we're slowly moving to more and more restrictive policy. And then you can imagine when the stock market starts to rally, financial conditions start to become looser, like we can see in the IEF LQD ratio, where in the past 2 weeks we've dropped about, 3.5–4% in terms of financial conditions. Now, this works against the Fed. The Fed will want the stock market. The Fed will want the stock market to break back down for their monetary policy to become effective, and for us to further move into more restrictive monetary policy. Now, we have 28 days until the next FOMC meeting. I think a lot of people are starting to hope for a 50 basis point increase rather than a 75. And personally, I think 75 is still likely. Now, if I'm wrong on this and they do increase it by 50 basis points, the markets could rally for a while. But they've been saying that it's probably going to bleed in for quite a long period in time, and there's not going to be much economic growth in 2023. So I'm with the Fed. When the Fed fully starts to pivot and they start moving back into more accommodative monetary policy, I believe that's the time to pivot in these markets. But right now, when you see the stock market go up and everyone gets excited, retail sentiment starts pushing up, and you see core retail sales start to push up with consumer confidence, this makes financial conditions start to loosen as investing starts to push back up, and this once again is very counteractive to the Fed's goal. So moving on from there, how does this all tie in with the DXY? Well, for the past month or so, the past 2 months, the DXY has actually been starting to come down. Now, from the peak, we are down about 8.2%, and you can see that this bull flag that we previously talked about, we talked about the support that I expected to hold at 109.45. It did not hold, and we actually broke to the downside of this this bull flag. So I guess I can't be right on absolutely everything in these markets. I definitely got the next bounce for the DXY wrong, but nonetheless, on the weekly time frame, I do see us coming back down to more support right now. I'm not too worried about the DXY topping out. I think the DXY has more to push to the upside, and also, if I pull up the chart for government bonds, you can see what further encourages a strong DXY is real yields in government bonds continuing to push to the upside. When people are investing in these government bonds, they're buying up government debt. That makes the DXY stronger. That makes the Ponzi cycle go on longer. Now, this is the monthly time frame. You can really see this is what we're panicking over right now. Since monetary conditions have started to tighten a bit and the bonds have started to go up, we've had times where we've had 35% corrections followed by explosive runs to the upside for government bonds. It was only like 3 or 4, 1, 2, 3, 4, 5 months ago that we dropped about 28% for government bonds, and right now we're down about 13%. So I'm definitely not saying we have to rebound today, tomorrow, this week. We might continue to move down to the downside until I'm back in about a week's time, but even when you come over to the 2-year is massively exploding. And if I come over and look at the US 10-year bonds minus the US 2-year bonds, this gives us a really good idea of when the Fed is going to pivot, because basically what this is the US 10-year rate minus the 2-year rate. So you could imagine when the 2-year for government bonds is increasing higher than the rate for the 10-year is, then the ratio of the 10 minus 2 is going to further decrease to the downside. And what this means is, once again, when the 2-year is increasing much faster, or rather when it's stagnating and the 10-year is dropping faster than the 2-year, it can be whatever it is, but the higher the ratio for the 2-year, or the higher the numerical value associated with the 2-year government bonds is, then the lower this ratio is going to move to the downside. And typically governments start to pivot in the 2-year before they start to pivot the 10-year. So once again, when you see the 2-year continuing to move to the upside, it's indicative that they're not ready to pivot. When they're ready to pivot, we're going to start to see the value for the 2-year drop much faster than the value for the 10-year. And when you've got something like the 2 minus 10, you can imagine if the 2-year is decreasing in value, then what you're minusing is going to be less as well. So subsequently, if the 2-year starts to drop faster than the 10-year, then this could start to have a reversion. And typically when you look at these lows, these are normally when the Fed pivots. So this is a really good metric to look at. I might make a quick educational video because I have had about 1 or 2 questions on how to even get the US 10-2 chart over on TradingView. So I'll look to get a video out for how to do that very, very soon. But nonetheless, that's pretty much all of my thoughts on the markets. We talked about next price targets for Solana, next price targets for Cardano. We talked about the news, the liquidity crunch that I've been predicting on this channel for the past 4 months or so. I really do think we're currently staring down the barrel of a shotgun, just kind of looking at this liquidity crunch wipe out a lot of exchanges. This is once again why, when I wrap up this video, I want the #1 message for you to be is to go out and get a hardware wallet. Make sure if you've got good money invested in cryptocurrency, cryptocurrency, you are securing your money. If you've got, you know, $1,000 invested in cryptocurrency, you can absolutely afford to spend 6% of that money, $60 or so, get a hardware wallet, stay safe, stay secure. Do not trust these exchanges with your money. So that's all I've got for you today. Like I said, I'm going to be away for approximately the next 7 days because I do have a kendo tournament that I am going to be fighting in. So I'm probably not going to be posting, well, I'm not going to be posting at all on YouTube. I'm probably not going to be posting too much over on Twitter. I'm probably not going to be posting too much over on Discord. I don't really want to overly analyze these markets and, you know, talk about my opinion when I'm prepping for a fight because I'm not in, you know, the right mindset. I'm too worried about surviving rather than thinking about what's the next move for Bitcoin. So bear in mind, these are all my thoughts for right now. I will be back in the next week. Make sure to follow me over on Twitter at 618_cowboy, and make sure to come over and join the Discord. So if you want to do that, YouTube, come over to my About section and you can see all my links down here for my Twitter, Instagram, Discord, and official merch. So all I've got for you. See you in about a week, Cowboys. Cowboy out. Peace.